So Select Water Solutions is a leading provider of sustainable water and chemical solutions to the energy industry. The company is focused on delivering end-to-end water solutions and chemical solutions through its three divisions: water services, water infrastructure, and oil field chemicals. The company is publicly traded on the NYSE under the symbol WTTR. And here to tell the exciting story is Senior Vice President, Chief Financial Officer, Nick Swyka.
All right, thank you, Stephen. Thank you, EnerCom. Great to be here with y'all. Even better to be out of Houston. So appreciate y'all spending time with us here. There will be forward-looking references here, as well as non-GAAP financials. Please review our quarterly and annual reports on our website. Select Water Solutions is the only company that provides full life cycle water solutions through proprietary chemistry. Our mission is to deliver operational excellence and develop sustainable water and chemistry solutions every day with a commitment to conservation and reuse. This conservation and reuse is core to many of the communities in which we operate, and we're pleased to be a part of providing that advancement. If we look at key trends in water and chemicals in the energy industry, with longer laterals, simul-fracs requiring more water, but more importantly, more water per hour and more water per day, operators are challenged to find this water and deliver it in the quality and quantity that it's needed. This use of simul-fracs and produced water and recycled water lowers the usage of fresh water, providing advanced operator ESG goals and better economics, while seismic response areas and additional scrutiny, both regulatory and from investors around disposal capacity and seismicity, have encouraged water networks that can move water across customers, across regions, and transmit the water from where it's not wanted and can't be disposed of into where it's needed for new energy development projects. In the Permian, produced water has doubled in the last 5 years, and in parallel, the use of this recycled water for new completions has grown at a very similar pace. Select is one of the few companies with positions both in the Midland Basin and the Delaware Basin with the advanced infrastructure able to meet this demand of both taking away the produced water, repackaging it, treating it with our proprietary chemistry to provide water that can be used in this new energy production. Why invest in Select? We are the clear market leader in full life cycle water solutions for the energy industry. We delivered durable free cash flow. Second quarter, we delivered $66 million of free cash flow. We have a target of providing 2/3 of our 2023 adjusted EBITDA in free cash flow through the year here. We have a very solid balance sheet, very low net debt, just $35 million as of the end of July. That $35 million is half of the $70 million of second quarter adjusted EBITDA that we delivered, so less than a quarter turn or around a quarter turn on an EBITDA basis, adjusted EBITDA. We have a disciplined approach to growth, but we've been very successful in executing accretive M&A. This M&A has provided the basis of our infrastructure development projects that we see today. Finally, we have a strong safety and sustainability focus. We are incentivized as a management team on delivering safe operations, on being 25% low at least, if not lower, than our peers when it comes to employee safety metrics, and then exceeding our water recycled volume growth targets. We operate across 3 segments. Water services is primarily around last mile logistics and providing that visibility, that transparency into the water as it goes into the well site, as well as the logistics of moving that water around the oil field from infrastructure into where it's needed. The bulk of our $100 million to $130 million 2023 CapEx program, half of that roughly goes into growth projects for water infrastructure segment. So as you can see here, water infrastructure comprises treatment and recycling, pipelines, the storage that's essential for transportation of that water, and disposal. These new contracts and new CapEx projects that we're putting into place are generally backed by long-term contracts, and they involve integrated water balancing across customers and geographies. Chemical technologies ties the other two segments together. So with advanced proprietary completion chemicals coupled with chemistry for treating recycled and reuse water, this segment provides the bridge throughout the full water life cycle. And again, we are the only company that can bring that in-house chemistry expertise to bear here. We did undertake a modest resegmentation during the second quarter. So we cored up the water infrastructure segment around the changing market dynamics, which are more towards fixed networks, integrated systems, recycling and reuse, and that full water life cycle I've mentioned. So the legacy fresh and brackish water sourcing business and last mile water logistics around our pipelines moved to water services, given that they are not technically part of that fixed infrastructure system network where our money is going in this cored water infrastructure future here. Chemical technologies, the name changed to reflect some initial penetration outside of oil and gas with some advanced chemistry, but nothing financially or otherwise changed in that business. So as you can see, we are primarily water services today. We do operate throughout the lower 48, roughly in proportion with the rig count. So the Permian is our strongest region. And again, Midland and Delaware Basin, we have advanced positions there. Looking forward into the future of the company, Select is a very different company than we were in 2018. So if you look back to then, we were roughly 80% water services, and what we know today is the core water infrastructure segment and chemistry were relatively modest. Our chemistry back in this era was primarily around commoditized chemistry in bulk versus today. Our chemistry has migrated to a much bigger part of our business, much more important. We operate both in the Midland Basin with in-basin manufacturing technology there, East Texas in Tyler with good connectivity to industrial projects, and then advanced R&D lab capacity in Houston to develop proprietary chemistry in partnership with our customers. So as you can see, that water services, even though it's grown substantially in the last couple of years, as a portion of our total business, we expect it to shrink as the projects come online from infrastructure and make up an ever-growing share of our business there. So third quarter, we do expect that infrastructure plus chemistry to be about 44% versus 40% in the first half of this year. And then in 2024, we expect the water infrastructure and chemistry to make up 50% or more of our combined business here. And again, water services is not shrinking, it's just not getting the level of growth investment backed by long-term contracts that we see in infrastructure. So you can see here, when we talk about full water life cycle, these three segments operate together to deliver that to the customer, whether it's the water piping infrastructure, or then the recycling, reuse, fluids hauling, the chemistry. We have competitors that operate individually in one or two of these buckets here. There's no company unique like us that covers the entire water life cycle. We operate also in every major lower 48 basin. I know this is difficult to see here, but hopefully it gives you some idea of just the level of infrastructure assets that we have in these basins. So upper left, the Delaware Basin in New Mexico. We have long-standing right-of-ways and fixed and mobile infrastructure there. Midland Basin, we've developed some recent projects there as well and been benefited by some recent acquisitions. Here in Colorado, the DJ Basin, we executed the first fixed recycling infrastructure facility. Very proud of that, and operating in Colorado, it's certainly top of mind here, and we were trusted by a major IOC to deliver that project. Bakken, Haynesville as well, we do have advanced infrastructure both through acquisition and organic development. That Haynesville one, I know with Gas Week, Haynesville is not at a record pace right now, but that pipeline system there, 70 miles from the eastern edge of DeSoto Parish into Texas, is highly lucrative for us and has been a great source of growth. As gas recovers and LNG export capacity expands in that area, we do expect considerable expansion there. This is our top 30 customers. As you can see, it runs the gamut between global super majors, high-quality large independents, private companies. So we're pleased to partner with a wide variety of companies who recognize our expertise in providing these solutions. We've made a number of acquisitions in the last 4 years here. I think the record to date does demonstrate we executed these at a good time in the market. These were primarily 2x or if not lower EBITDA type of acquisitions. They did require putting a lot of pieces together, both in the back office and in the field, but they've been incredibly beneficial for us here. The infrastructure projects that we're executing on today, that we executed on the first half of the year, that we expect to talk to you about in our third quarter call and beyond, a lot of those are networking projects that were made possible by these acquisitions. So when we bought these companies, it wasn't just for the existing earnings stream, although that was helpful and purchased at a good valuation, but more importantly, to take individual infrastructure assets and piece them together into a full water life cycle network across different counties, different basins. The more momentum we get there, the more attractive the opportunities are. So we may not see M&A in the near future. We may in the more distant future. Hard to say, but the pipeline of opportunities here remains robust. Our financial performance has demonstrated that. So we, many quarters ago in 2022, surpassed our pre-COVID run rate. So as you can see on the left, our revenue per completion has increased 52% from the first quarter of 2020 to the second quarter of 2023. Now, part of that is pricing recovery. So we were talking about revenue and the recovery and the factors driving that, as well as the enhanced revenue per completion, driven more and more by the infrastructure projects with long-term contracts. Revenue has stabilized over the last couple quarters here with the overall decline in oilfield activity. However, adjusted EBITDA has continued to progress higher. Part of that is due to cost reductions internally with synergies around our recent acquisitions, recent pricing improvements, but most importantly is the factor of continued infrastructure projects coming online to drive EBITDA higher. Look at our balance sheet. So I mentioned the $35 million we had on our debt facility as of the end of July. This is as of the end of June here. July is in our 10Q referenced. But you can see we have ample liquidity of about $200 million, very low net debt to adjusted EBITDA. As we look at our liquidity, we had the industry's first sustainability-linked credit facility. Provides two targets with higher or lower interest rate adjustments, recycled water volumes and employee safety. Very pleased that we're outperforming on both of those, both for 2022 and year-to-date in 2023. During third quarter of 2022, we initiated our first ever quarterly regular base dividend, 5 cents per quarter, 20 cents per year per share. We are coming up on that anniversary pretty soon here, and we'll have a discussion on that base dividend and what potential we have to move it. Returning capital to shareholders is a core priority to us. We executed over $40 million during the second quarter alone of shareholder returns, both between the share buyback and the regular dividend. And we've returned $136 million to shareholders since 2018. And as you can see, that trend is intensified during 2023 relative to previous years, and we hope to continue down that path. ESG is very important to us, as I mentioned. Core to that is water recycling. A lot of the areas we operate, access to fresh water And clean water is the most important sustainability metric, if you can call it that, to the livelihoods of these communities. So we're very pleased to be the leader in developing that solution, leaving those communities with more fresh water to use toward agriculture, towards municipal needs, towards leaving in the ground for future generations as we increase our water recycling and exceed our targets. Chemistry is an essential part of the ESG solution, but also of economic solutions. As we pull together different sources of produced water in a recycling job, the challenge is those sources change over time. And so you have to have a chemistry profile that changes with it. It can't be a static treatment that you devised at the beginning of the frac job with the quality of water that you had then, because advanced large-scale recycling jobs like the one we announced this morning with Endeavor, 300,000 barrels per day, require a constantly changing chemistry dynamic. So with Fluid Match, we're able to provide that, ensure that we maximize well productivity and minimize excess cost to the operator, so both driving ESG and economics. Technologies provide real-time monitoring, feedback, automation, and control of water throughout the life cycle, which reduces risk of spills and emissions. I'll skip going into these individually at this time, but thank you all for being here. We are the water solutions market leader. Free cash flow and a strong balance sheet is core to our financial philosophy. We execute on M&A, but in a disciplined manner, and we do it all with a strong safety and sustainability focus. So thank you all for your time, and apologies for the interruption.